Hey everyone, this is Profit Path. Markets are jittery today after the Fed's first rate cut of 2025. Big names are moving, Nvidia slides, Workday, and Uber are in focus. If you want real-time stock insights, hit subscribe now. Okay, let's start with the biggest story moving markets today. The US Federal Reserve has cut interest rates by 0.25 percentage points to 4.425%. It's their first reduction since January, making this the first rate cut cycle. In fact, as a recap, the last time the Fed cut rates this fast, that was in 2008. This time around, however, things are different. Today's rate cut is being called a risk management cut. What does that mean? It means the Fed is cutting rates not because everything is awesome, but mainly to prevent risks. And what risks are those? Mainly two: a potential banking crisis and slowing growth. On the banking front, regional lenders are still struggling thanks to higher rates. A little bit of rate relief could help them. Then on the growth front, the US economy grew only 1.1% in the first half of 2023, so the Fed wants to avoid an outright recession, especially ahead of the election. But guess what? There is no guarantee that this rate cut alone will fix either problem. As for banks, they need more than just lower rates to boost profits. And as for growth, the Fed is just one piece of the puzzle. Consumer spending is also key. And consumers are still struggling with high debt payments and inflation. Anyway, going forward, the Fed signaled more cuts may come before year-end, but they aren't promising anything. In fact, the exact opposite. They said future decisions depend on incoming data, which could go either way. So basically, we have entered the danger zone where markets will be super sensitive to every bit of economic data. Just imagine if inflation comes in higher than expected, markets could reverse quickly. Or if job growth surprises on the upside, markets could rally. So as investors, our focus should be on monitoring incoming data releases closely. Now let's get to some movers today. After the Fed announcement, US equity futures rose modestly. Dow futures up 0.3%, S&P futures up 0.5%, and the Nasdaq 100 up almost 0.7%. Let's start with Nvidia. Shares dropped about 2.7% today. Why? According to Bloomberg, China has ordered some of its biggest technology firms to stop purchasing Nvidia's newest AI chips, citing national security concerns. Now, what's interesting is that these restrictions don't apply to existing Nvidia chip customers like Baidu, Alibaba, Huawei, and Tencent. It seems like China is trying to curb the use of American AI technology. And given Nvidia's dominance in AI chips, this order could impact China's AI development. Next up, Workday. Shares popped more than 6% after market hours yesterday. So why the jump? Well, activist investor Elliott Investment Management disclosed a $2 billion stake in Workday, praising its cloud-based enterprise resource planning software and long-term growth strategy. Basically, Elliott believes Workday has lots of untapped potential and is pushing for changes to boost growth, including hiring a new CEO. Then we have Uber. Shares fell about 2.5% after hours yesterday. Why? Because Uber's biggest rival, Lyft, announced a big deal with Waymo, the self-driving car unit of Alphabet. So what does this deal entail? Well, starting in early 2024, Waymo will offer robotaxi services in Nashville. And guess who owns the largest ride-hailing market share in Nashville? It's Uber. So basically, Uber's competitive landscape is about to heat up. Plus, Waymo has a big advantage. They don't need to pay driver salaries, which could put pressure on Uber's margins. So basically, the rate cut is good news for equities, but the Fed's language is quite cautious. They are not committing to many cuts just yet. That could limit upside. Of course, there are risks to this trade too, like the Fed could cut more aggressively than expected, boosting stocks further. Or there could be bad news on the inflation or growth fronts, tanking stocks. Now let's quickly look at some other markets. Indian markets opened higher today. The Nifty 50 rose almost 1% and the Sensex jumped over 300 points. Which sectors led the charge? IT stocks were shining bright, up almost 2%. And guess why? Because lower US rates benefit IT companies. You see, many IT companies in India source business from the US market. And when US rates are low, American businesses expand operations and invest in technology. So IT stocks in India benefit. Now, looking at emerging markets, they seem to be doing quite well. Broadcom is up 1.3%, Taiwan's index is up 1.1%, and China and Japan are also in the green. You see, lower US rates tend to weaken the dollar, making investments in these countries more attractive. But here's something to keep an eye on. Brent crude is down almost 1%. Oil prices are often affected by US rates. When rates are low, oil tends to fall. So the rate cut could impact energy prices going forward. So to wrap up, the Fed cut rates, but with cautious signals. Nvidia dropped, Workday and Uber saw big moves. And global markets, especially India, reacted positively. What's your view? Is this just the start of a rally, or are we still in risk territory? Drop your thoughts below and make sure you subscribe to Profit Path so you catch my next update. See you tomorrow.